A very good afternoon, students. Today's class study about East Asian crisis. It is small concept and it is asking 2 marks questions. East Asian crisis. And what is East Asian crisis? Causes and effects of East Asian crisis. Let us start. The Asian financial crisis of 1997 affected many Asian countries. South Korea, Thailand, Malaysia, Indonesia, Singapore, and Philippines. These countries are called tiger economics. The countries were annual growth rates of 6% to 9%. These were some of the largest growth rates in the world at the time. The crisis caused their stock markets and the currencies to lose about 70% of their value. The Asia financial crisis is generally considered to have started on July 2, 1997 with the devaluation of the Thai baht. Thailand and be showing the sign of financial strain of more than a year. During the 1996, it becomes apparent that for too many office towers has been built. First the nation real estate market, then its stock market went into decline. In the first half 1997, speculation about a possible devaluation of the accelerating loss of foreign exchange reserves and only July 2 the July 2 country attempted a controlled 15% devaluation as in the case of Mexico in 1994. However, the attempted moderate devaluation out of the control sparking massive speculation of the for Thailand itself a small economy. However, the sharp drop in the Thai currency was followed by the speculation against the currencies first of our immediate neighbor Malaysia, of Indonesia and larger and more developed country of the South Korea. Causes of Asian financial crisis. East Asian crisis, also called as Asian financial crisis. The causes of Asian financial crisis are completed and disputable. A major cause is considered to be the collapse of the hot money bubble. During the late 1980s and early 1990s, many Southeast Asian countries, including Thailand, Singapore, Malaysia, Indonesia, and South Korea, achieved massive economic growth of an 8% to 12% increase in their gross domestic product. The achievement was known the Asian economic miracle. However, a significant risk was in the achievement. The economic development in the countries above were mainly boosted by export growth and foreign investment. Therefore, high interest rates and fixed currency exchange rates like the US dollar were implemented to attack hot money. So exchange rate was pegged at the rate favorable to exports. However, both the capital market and corporate were left foreign exchange risk due to the fixed currency exchange rate policy. In 1990s mid period, uh, recovery of US from a recession, the Federal Reserve raised the interest rate against the inflation. The higher interest rate attract hot money to fall into the US market, leading an appreciation of the US dollar. The currencies pegged to the US dollar also appreciated and hurt export growth with a stock in both export and foreign investment. Asset prices, which were the leveraged by the large amounts of credits, began to collapse. The massive capital outflow caused depreciation pressures on the currencies of the Asian countries. The Thai government first ran out of the foreign currency to the support its exchange rate, facing to the forcing into the float, and the value of the baht thus collapsed in immediately after the war. The same also happened to the rest of the Asian countries. Effects of Asian financial crisis. The countries that were most severely affected by the Asian financial crisis include Indonesia, Thailand, Malaysia, South Korea, and Philippines. They saw their currency exchange rates, stock markets, and prices of the other assets of the plunge. The GDPs affected of the countries even the fell by double digits. From 1996 to 1997, the nominal GDP per capita dropped by the 43.2% in Indonesia, 21.2% in Thailand, and 19% in Malaysia, 18.5% in South Korea, and 12.5% in the Philippines. Hong Kong and mainland China, Singapore, and Japan were also affected, but less significantly. Besides, its economic impact of the Asian financial crisis also resulted in political repair, uh, repercussions. The Prime Minister General of Thailand and President of Indonesia, Suharno, and resigned, and anti-Western of was triggered especially against the George Soros, and was blamed for the triggering crisis with the large amounts of currency and speculation by some individuals. The impact of Asian financial crisis was not limited to Asia. International investors become less willing to invest in a lend to developing countries, not only the Asia, in other areas of the world. Oil prices also fell due to the crisis. As a result, some major mergers and acquisitions in the oil industries took place, achieve economics of scale. In the last Asian crisis, IMF role. Role of IMFs. The International Monetary Fund is that international organization that promotes global monetary corporations and international trades, reduces the poverty, and supports the financial stability. The IMF generated several buyout packages of the most affected countries during the financial crisis. It proved package of around $20 million to the Thailand, and $40 billion to Indonesia, and $59 billion to South Korea to support them. So it did not revolt. The the packages are structured adjustment packages. The countries received the packages where of the ask to reduce their government spending, allow the resolvent financial institution to fail, and raise interest rates and aggressively. The purpose of the adjustment was supported currency value of the confidence over the countries so well. Okay, these are the East Asian crisis or Asian financial crisis. Thank you.